PayPal plunged 25% after its earnings report. Is the payment giant really in trouble? The prospect of interest rate hype has really spooked the US market in recent weeks. And in such a volatile environment, we are now in earnings season as well. So this means that any sign of bad news from a company will really lead to a huge price decline as well. And I think that is what happened to fintech giant PayPal Holdings. Hi guys, Stanley here. I'm the co-founder of valueinvestasia.com, an investment portal where we'll give you in-depth analysis on listed company and investment news every single week. So if you're new to the channel, remember to hit that subscribe button so you not miss out on any of our videos. Anyway, let's talk about what happened to PayPal. After reporting its 2021 fourth quarter results, its stock plunges 25% the following day. And yet, when we look at its financials, things are looking pretty good. PayPal delivered a solid finish to the year 2021. The company's total revenue rose 13% to $6.9 billion in the fourth quarter. That largely matches the analyst estimate. But it is the softer outlook management has given for 2022 that sends the stock crashing. During its quarter 4 earnings call, PayPal management revised its previous 2022 revenue growth expectation down to slightly to the range of around 15% to 17%. And the main reason they gave was due to lower than expected consumer spending. And of course, a global surge in COVID-19 infection due to the Omicron variant has caused many economic issues. This includes labor shortages, supply chain disruption, and rising inflation across many consumer products category. And this time round, the government stimulus package does not seem to ignite spending again. Unfortunately for PayPal, the biggest impact was in the e-commerce industry. And after its amazing boom in 2020, purchasing activity in this industry has sort of cooled down a lot. And a slowdown in spending means that less revenue for PayPal as it collects payment processing fee that relies on the volume of payment in e-commerce. Apart from that, something from PayPal past is also haunting it today. And that goes is eBay. In 2014, PayPal spun off from parent company eBay after outgrowing the e-commerce platform. But prior to the split, PayPal really served as the primary payment platform on eBay. Since then though, eBay has progressively tried to reduce its reliance on PayPal. These exert significant downward pressure on PayPal's revenue due to the lower contribution coming from eBay. For the year 2021, PayPal reported that the migration has reduced its revenue growth by about 7%, which is $1.4 billion. On an ex-eBay basis, the company revenue for 2021 could have grown about 29% a year. But luckily for PayPal, there is light at the end of the tunnel. And eBay transition is set to finalize in year 2022, with the final impact on PayPal around $600 million in revenue this year. Dan Schulman, the CEO of PayPal, commented in the earnings call that he really looked forward to being able to stop adjusting for eBay and letting the strength of our core results speak for themselves. So apart from mitigating the risk from eBay, PayPal has also been building its PayPal app into a one-stop shop for all consumer financial services. Within the app now, users can have a wide range of features from bill payments to digital wallet, buy now pay later features, and even cryptocurrency services. This PayPal super app, launched in October 2021, is really showing encouraging signs. According to the company, app users contribute double the average revenue per account as compared to its pure checkout PayPal customers. These customers are also more likely to remain loyal to PayPal. And being a super app, these give PayPal a direct access to introduce some of its other and even new services to its user within the app. For instance, the shopper traffic within PayPal's shopping tab has increased about 35%, and shoppers going from the shopping tab into merchant website has also shot up more than 7-fold. Apart from the PayPal app, the company also owns Venmo, a peer-to-peer payment app. And given the popularity of Venmo, especially in the US, much of the growth potential could be coming from this app. Currently, around 83 million users are using Venmo, and the app total payment volume for the year is around 230 billion. That is about a 44% growth from a year before. PayPal has also announced collaboration between Venmo and other high-profile merchants like Amazon, Starbucks, and DoorDash. With more vendors working with Venmo, its total payment volume is very well positioned for further growth. And given the success of Venmo, PayPal can also build by integrating more of its features from the Super App into Venmo as well. Next, PayPal has also announced of a drastic change in its customer acquisition strategy. After analyzing its customers' behavior in the ecosystem, the company realized that their previous acquisition strategy has exposed a key weakness. While it is successful in generating new account creation, it has attracted customers with lower engagement and higher churn rate, giving PayPal an undesirable return on its acquisition costs. Hence, the company has decided to shift its emphasis towards driving engagement among its existing users and looking for ways to acquire higher value net new active account as well. So this new strategy could mean that we will start to see a slowdown in its customer acquisition number. For example, in the recent quarter, the company added about 9.8 million new accounts, a figure that is much lower than any of the 5 quarters previously. But the company reiterated that these figures was still within their expectation. And it will now focus on encouraging existing users to become more engaged within the app, as the data shows that the increased growth in average revenue per user will provide them with much better return on investment than just simply finding new users. So if we focus on that new strategy, then PayPal is performing very well. Transaction per active account actually grew 11% in the 4th quarter. And at 45 transactions per account based on its 12-month average, customers is now using their account almost once a week. And growth in customer engagement really accelerated through the end of the year. To view PayPal's growth in the future, its transaction per account might be a more important matrix as opposed to just customer acquisition growth. Unfortunately, it seems that the market is still worried by the slowdown in its new customer acquisition. And so with the much lower growth in 2022, this means PayPal would likely fall short of its 2025 revenue target of 50 billion. Although management still expect revenue to continue growing around 20% a year, which is still a respectable number. In terms of valuation, based on management forward guidance for this year, the stock is trading around 23 times its free cash flow. And its free cash flow is also expected to grow about 20% to 6 billion this year. Although investors are very worried about PayPal in the short term, we as long-term investors should focus on some of the key fundamentals. PayPal is still a trusted and well-known brand, with more than 70% of North America and European retailers now accepting either PayPal or Venmo at checkout. That is really a strong competitive advantage and should keep the business growing for a long time to come. And in a broader view, PayPal is operating in a massive $110 trillion market. And right now, it only has a very low global market share. On top of that, it is in an industry that is still expected to grow for the long term. And for this reason, PayPal still has a long runway to grow with the industry and also gain more market share through its new offering. With around 420 million active accounts and 34 million merchants account, PayPal has a network effect and it can be seen as one of the most stable fintech in the world today. Although the stock could still fall lower in the short term, I am still very optimistic about the long-term future of PayPal. And in terms of its balance sheet strength, PayPal generated a whopping $5.4 billion of free cash flow in 2021. This means that the company has all the financial resources it needs to stay one step ahead of competitors and not rely on debt. So these are the reasons why I'm not too worried about the current stock crashes and still happily holding on to my investment. But what do you think about the sharp stock crash of PayPal? Share your thoughts with us below. Anyway, if you have gotten value from the video, please give us a like and share it with a friend who you think might benefit from it as well. And if you're ready to take the next step into investing, you can always check out our free investing course at valueinvestasia.com/free course. There, you can learn practical skills like how to read a financial statements to how to value a stock. Anyway, that's it from me. My name is Stanley. Till we meet again, investively.